Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Monday night, 12/15/2025. Well, the AI route continued for another day. Question is, can Santa save the rest of the markets? Again, my name is Jeffrey Scott, Market MRI Pro at gmail.com, Google Group Top Down Trader, www.marketmripro.com. Thanks again to those that joined me on Saturday morning. I do a 2 to 3 hour training and educational program at no charge online at least 4 times a year, probably 6 times a year. And I really use it to support those people that have bought my products. Um, you know, I'm not really intending to teach people how to use the basic platform if it's somebody else's platform. But if my product is built into the platform, I want you to be able to use my product and know how I use it and how I trade with it so you get value out of what you purchased. And obviously, if you buy my platform too, well, then you get a lot of my attention. But no, I try and help everybody understand the benefits of top-down trading and how I make it easy using the various tools I have in the market, whether it's in my freestanding app, Metastock, TradingView, TradeStation, wealth charts, and whatnot. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate how I use my tools for top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. And as I had previously alluded to, I have tools in multiple different platforms. Now, after hours, futures are down again. Dow's down 140. NASDAQ's down 207. Russell's down another 13 points. So it certainly looks like the slaughter continues. And I put that in quotation marks. It's very limited part of the market that's gotten slaughtered. Let's take a look at the markets and see what we think is likely to happen and how long does this go on for. Again, my Google group's called Top Down Trader. I post things there from time to time. Every night, if I post a video on YouTube, I'll post a link on the Google group so you get notified that it's up and running. When I don't have a discount on my tools, I give a discount to Top Down Trader members, and it's free. And why not join? I'm a nice guy. Not that that's a reason to do anything, but just ask my wife. She'll tell you I'm a nice guy. If it's a day that doesn't include a R in it, maybe. No. My lovely wife and I have been married for 40 years, and she turns 65 tomorrow. So that's actually a point I wanted to make. There is a fair chance there won't be a video. If you have any questions about how I trade, what I do, how I think, marketmripro at gmail.com. Any issues with customer support, coding at marketmripro.com. Consider joining our group, and let's go. All right, so let's go into the daily briefing. And what we can see is it wasn't a slaughter today, unless you're in a lot of Bitcoin. Bitcoin was down another 5% or so. 5-day change just over 5%, closing near the bottom of the range. Volatility was only up 0.1. The diamonds were relatively flat, as was the dollar. The spiders were down 0.15. Q's down 0.5%, and the Russell down 0.76. When you look out 5 days, you could see the Russell still positive. It has been doing very well, and the diamonds are still up 1.47 over 5 days. You got a reduction in your high lows. You're still positive, but the numbers have come down significantly to 69 and 24, but still positive. And it's really the 52-week new highs that seem to be coming down. And then on the NASDAQ, the 52-week new lows is rising. If we look at sector performance, you could see most of the sectors were green. It really was about another day of technology down almost 1%, energy down 0.7, that pulled this market lower. From a themes perspective, Asia, copper, Norway, preferreds, games, aerospace, and biotech were the only themes that were up. And from a loser perspective, well, cannabis giveth and then it takes it away was down 7.76. It's going to probably be volatile here as we wait to see what the Fed does. Blockchain, uranium, fintech, cloud all led to the downside. So really a tech route continues. Now, interestingly, when you look at some of the breadth and we break out the S&P 1500 from the Nasdaq, the NYSE sectors, the color is today, the gray would be Friday. Across the board, we pretty much have more sectors positive and more industry groups positive, but only 49% of the S&P 1500 were up, 31% of the Nasdaq, and 44% of the NYSE. So despite not much damage to the averages, the average stock was down. Timing model did not change. The Qs, let's get the weekly. So we start with the weekly. You can see the Qs have now turned their bongo red on the weekly. You could see that they're above the WMA and therefore they're still in a buy. So our 4 weekly ETFs are in a buy, but we know that the Qs are already deteriorating 2 days in a row below. We could flip to a sell signal tomorrow on the spiders, and we're holding up fine right now in the diamonds and the Russell. Again, as I said, over the weekend, we are just off all-time highs. It's hard to be very bearish here, but I've raised cash because I make money at reversals. And if we're pulling back, we're ultimately going to reverse. And I'd rather be buying on a pattern where we bounce like this than when we're falling like this. So raising cash here is okay. The question is, how far is it going to go? And we talked about seasonality. So let's go look at the index ETFs. And you could see that we might have, from a seasonality perspective, a couple more days of down before the market turns. And most people I talk to think the market turns around the 20th. And the bottom here is the 18th, 19th, 20th. So we'll see. Do I think this is going to crash here? No. Do I think Nvidia is going to $50? No. I think it's setting up a good buying opportunity. But I do think there are signs of a top for weeks, as everybody's been talking about. So Spider still in a nice uptrend. Pull back here to the 21-day EMA again. Um, Still above the 17, the 50, and the 200, which is down here. This is the 100. A lot could go wrong before this thing breaks down. So I'm not giving up the bull yet. Um, do we pull back to the 100 like we did here at Snapback? Not the end of the world. If we look at the Qs, may look a little different because the Qs have broken through the 21-day EMA and the 17, but and they broke through the 50 today, so that's very different. Still got the 200 over here, and again, seasonality for the next couple of days is negative, and then we have the run into the year end with the Santa Claus rally, so we'll see if we get one. I'm just bummed because it messes up my Netflix seasonality trade. Diamonds against powerful uptrend. How bearish can you be? You're just a bit off the high. Nothing really has changed there. And then the Russell. 2 down days. Do we get a third and then a bounce? A little bit more of negative seasonality here. It's hard for me to be super bearish up here. Maybe I should be, but except for the Qs, we're holding up okay, and we're at a time of the year where we expect seasonality to go against us. Just be nimble, and I think raising cash is part of being nimble. So the VIX was up today. It was up 4.36% on the futures. It's still pretty darn low. Let's see if it can break above the 50 and the 200 and then pay much more attention to it. Again, I'm watching it closely. The dollar looks like it's going nowhere, and I think the dollar was kind of flat today at the close. It was down 0.07%. If we go into commodities, it's a mixed bag, some good, some bad. Gold and silver have been super strong. You can see gold perhaps setting up a little flag here after the recent breakout. Not convinced that gold doesn't go higher. That would be my base case. Silver, just off all-time highs, was actually up 3.58%, reversing some of this painful big bar down. Now oil is struggling. You can see it's squirting out the bottom. Does it go down 10 bucks more? Who knows? But USO is pretty weak, and natural gas is squirting out as well. Um, what I'm probably more interested in is what the 10-year did, and after a gain of 1.33% yesterday in the U.S. markets, it lost 0.29. If it consolidates here between the 50 and 200, it's not that big of a problem, but if it breaks out above the 200, it might be concerning. And if we look at the 30-year, which has already broken above the 200, this is the danger area. And if it gets above it, it'll pressure the market. And we were down just a teeny bit, 0.12 today. So how do I put this all together? Hard to commit new cash, although this is more of a grinding, choppy rotation, significant rotation. And there are things that are doing really well. But if you're a growth stock investor like I am, you're raising cash because I did nibble on some Ford, and then after hours today, Ford announced like a $19 billion charge as they're going to stop making some of their larger EVs. And I'm thinking, great, I finally go into Ford, which was paying like a 5.2% dividend, and it's actually trading up after hours despite that big of a charge. When markets rotate, they rotate, and the news becomes secondary. The buckets, well, we have very few stocks up at the top anymore, but we also have very few at the bottom, except on the NASDAQ where it's up to 10%, not a signal. So nothing here tells me that we're going to reverse and go higher, still kind of neutral. If I look at the market breadth, we could see the NYSE is just off all-time highs, while the NASDAQ composite is broken through. So a divergence between these two indicators. We talked about how that thing was probably getting to the point of reversal, but was not quite as high as it was back there. And it's heading down as the market's reversed. You can see their new high, new lows are still positive, but look how they've come down. AD lines, up, down, volume are negative. Same thing over here on the NYSE, but the index is holding up much more. It'll be interesting to see how does the NYSE break, the broader markets break, or does the NASDAQ start to get heal? Which comes first? Time will tell. And if we look at the broader breadth, really going to focus just on the 13-week new high, new low, 0.81 on the spiders, 0.81 on the S&P 1500, 0.47 on the NASDAQ, and 0.82. So no signals here. The NASDAQ is falling pretty quickly, but it's still got a ways to go before it's the kind of thing that I would consider to be a signal. So we're neither overbought or oversold. It looks like it's pretty, probably not a rout because rout, I think, is a little bit more of a disorganized sell-off. It seems pretty orderly right here as people are abandoning the AI trade, which will probably mean it'll set up some good buying opportunities there. Looking at the ratio charts, um, materials still holding up okay. Um, Financials improved, industrials improved, technology no. Staples is trying, as is discretionary. Healthcare improving. Utilities have sold down. This was from a split that hasn't been fixed yet by the data provider. Looking at the JS layout, and I really don't want to go too deep today because I don't know if I'm ready to tell you go out and buy, 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 buy. I'm not. So let's start with the top-down perspective. If we look at the broader markets, I've got cyclical, which is discretionary, utilities, and staples. And since real estate's right there, those are the four things that were up today. There's 822 stocks in there. If we rank the industry groups from those four, it's travel, tobacco, food, travel lodging, auto, education, apparel, REITs, and apparel, and then hotel and motel. Those are extremely defensive. If we come down here and we go in and we want To eliminate those below $5 and 500,000 shares, we're left with 86 stocks. Now, we could flip through these very quickly. Let's just rank them here by number of up impulses. And let's just go through and look at some of these. Adalem Global Education kind of looks like a split, but I think it was just a sell-off probably on bad earnings. Let's see what we got here. Earnings were October 30th, and they look great, yet the market didn't like them. Why I say they look great? Because you have positive surprise. Maybe they didn't like the revenue miss. I'm not interested. Pebble Beach or Pebblebrook, another REIT. That's in a nice, loose but steady uptrend. Pays a 3.21 dividend. Nothing exciting. HSY, Hershey, um, earnings are out. You know, is it going to break out of this? Could. Is this a high growth entity? No. Getting ready to break out there. What was the dividend on Hershey? 3.16. Rent the Runway had earnings popped. You can see the earnings were 712, and they had a surprise to the upside on earnings and revenue. Cheap stock, MIO, or Mo rather, Altria Group, pays a 7.62% dividend. I'm a cancer doctor. I can't buy tobacco stocks, but you buy this when it's cheap because the dividend play. Gap, hard to believe, but Gap is in an uptrend pullback. Looks like it's ready to roll. Expedia is a travel stock, expensive travel stock, probably at all-time highs. Let's look at monthly. Yep, all-time highs on Expedia. How cool is that? Deckers, outdoors. Got to get above the 200. XHRZ, this is one that showed up now 3 or 4 days in a row. And this is one we called out here with the double momentum. And I talked about how this double momentum is my best signal. And that I was impressed with the relative strength in the OBV. And now is it getting a little bit, yeah, it's getting a little bit extended, but it wasn't back here. Worldwide Wolverine. I always wonder if these are fellow Michigan Wolverines, and if they are, they're in mourning too with our coach. Um, Struggling to get back to the 200. Not my kind of stock, but here's another hotel stock, Wyndham. So this is the second of the hotel stocks. We've looked at several of them over the weekend as well. And when's earnings come out? Earnings are not to February, 90 cents versus $1.04. Not a lot of growth there. In fact, none. The medical REITs seem to be holding up well. So here's one that pulled back to the 50. And I would say the 50 has been a buying opportunity going back for several months. It pays a 2% dividend. I like medical REITs. Why? Because, hey, I sold my practice to one, and then I signed a long-term lease, and it was personally guaranteed. Medical practices don't go out of business. And typically, if they exit, it's because the hospital acquires them and the hospital gets stuck with the lease. It's not a bad place to loan money. So that looks interesting. VIK cruise ships were super strong again. We looked, I think, at RCL. It was on Saturday, it was either do RCL or MasterCard. And of course, I chose MasterCard to do the workup on, but RCL in the handout is reviewed as well. So these have been strong. We talked about Tesla yesterday. I thought Tesla looked great, and Tesla actually gapped up and was up today 3.56%, certainly one of the market leaders. So from a top-down perspective, you're just seeing things we haven't seen in a long time. Again, the cruise ships are back. Here's Royal Caribbean, the big guy. And this one's not too expensive. I was impressed to it because it was breaking above the 50 and it was up today 3%. Earnings are January 27th. They've had surprises. Pays a dinky dividend that's really non-existent. So here's another NC Norwegian, similar breaking out above the 50 and the 200. I'm not rushing out to buy, so I'm not rushing out to give suggestions that I like things. So let's just ponder and move over to the bottoms up because there is one stock that I thought looks interesting, and it ties into the cruise ship theme. So let's go to JS layout and let's drop that down, switch to impulse. So I'm just going to go into look at my clear my filters, and I got 37, 39 stocks. Let's look at my A pluses. I do not know if this stock is even real. ARBKL. Um, I don't see trade on it today. The last data I have is from Friday, and it's a weird instrument. I don't know if it just didn't have any volume. CNBC did not have it in their database. Let me just look and see if Thinkorswim did. Because I was surprised that it wasn't updated. I thought it was a weird thing when I looked at it over the weekend, although I like big dividends. IRBKL does not exist in Thinkorswim. So this may have been a takeout, or maybe they closed the notes, but I can't find it anymore. CCK, thought they were billboards, but let's see. We click see earnings are not out to February. $1.71 versus $1.59, so minimal amount of growth, but it trades at only a 14.8 PE. It's been growing in that level, and it pays a dinky dividend. There's that double momentum. That's the key driver on these stocks is that they have a double momentum dot. It's not extended. Relative strength and OBV looks great, and my history is these things go higher. That's why it's my favorite scan. I give it an A plus. On the A's, um, we have a bunch here, and I thought it was interesting. Arch Capital. I thought this had something to do with coal. Let's look. Nope, it's insurance, and there must be a different Arch that's in coal. So here's an insurance up 5.54%. Um, it's got pretty good growth with surprises. It's going to have 234 versus 226. That's kind of flat, but it's about the 5.5% dividend, and technically it looks like it wants to break out. There's CCK again. CNO financials, nice breakout today. Um, we looked at Hershey's. Petco as a utility. Oh, Petco's a real estate. Phillips, Edison and Company. REIT, grocery anchored shopping stores. Okay, Simon. Well, this is interesting. So we've got a squeeze, momentum, relative strength and OBV breaking out, not extended. So a fresh breakout. They own grocery stores and pay 2.91. Simon Property Group, or they own shopping centers rather. Simon Property Group also owns shopping centers, and they pay a 4.71. And are they getting ready to break out above this line? Might be interesting to watch. The one that I liked, and it's not on this list because the weekly bongo hasn't turned yet, is OSW. So if I was to go and buy a stock tomorrow, and if is a very big word, and I see the same types of things I'm seeing tonight, I kind of like this OSW, and let me tell you why. This is a spa on cruise ships, so they own their market. They're not cheap. Um, Cruise ships are doing well. This is a stock that might do well because the cruise ships are doing well. If we look at the technicals, it's going to be 26 cents versus 20. That doesn't seem like much, um, but it shows that what, 15% growth? Its multiple is 20. Is it 15? Yeah, I guess it probably, no, it's more than 15. It's 30% growth. Let's see. 22 to 25, 25 to 20 is 25%. So it's got some growth. It's got some revenue growth. Doesn't pay much of a dividend, but this might be another way to play the boom in cruise ships. Just a thought. And then imagine this, Pfizer, squint your eyes. Pfizer's in an uptrend now. This thing's been dead for so long. If we look at the weekly chart, it doesn't look like much. What does Pfizer pay? 6.33 dividend. And I mentioned earlier that I had bought some Ford today. And tight little uptrend. It was actually down 0.8% at the end of the day. And what I really liked about it was 7.92% dividend. And the interesting thing is, it announced really bad news after hours, pulling the plug on the EVs, $19.5 billion charge. It should be selling off, right? Last I looked, it was still trading up. So sometimes that bad news comes out and there's a sigh and the stock goes higher. So be careful out there. Um, I don't think this is the end of the bull, but I don't know that for sure. I'm raising cash. I'm not deploying a lot. It has to be a special situation that looks really special. I'm nimble. You should be nimble. We're not money managers with $2 billion worth of assets that we move like the Titanic moves. Heck, we look like a little canoe in the rapids. We just point and we go in that direction, and we don't move the whole market with us. Have a great day. We'll see you probably not to, gosh, Wednesday night, and then I'm going to probably spread out my reports over the holiday season. Thank you, everybody. So much thanks to the people that joined me on Saturday. I don't do them to be alone. I do them to share my knowledge back with others. I've been doing this for a long time, and it really, it was a great attendance. And if you weren't there, go sign up for Top Down Trader. I'll send you the video. I'll send you the slides, and maybe you'll join the team.